I'm with it, I swear. Upcoming schedule is here. It looks like we have a normal week next week, February 14th. Oh, Valentine's Day. Your Valentine will be Peter talking about how to create the perfect smart trade entry, and then Mike will have his trade book meeting at 5 on Tuesday. So all normal times next week. So that's a good thing. The only thing I've added to our roadmap here, the only green check mark in it, and again, as always, this is a very general representation of the experience you might be having, but I just checked off setting trading targets. It's probably a good time as you start to build up your kind of repository of trades that you start to think about what some good targets might be for you. And there's different kinds of targets in trading. There's like daily goal type targets and there's per trade type targets. So I know, like when I trade, I know certain stocks are good for certain kinds of moves, and that takes a little bit of time to understand what stocks can actually do and how much you can expect out of different stocks. And then as you start to focus more on a particular type of strategy, you'll start to understand what kind of day you can have and how much movement you can expect as you trade different stocks and what might be a good daily goal. So it's something to think about this point. Maybe a little early for some of you on that, but something to keep in mind that you'll want to kind of suss that out as we go along, because it's an important thing to understand what's actually achievable, especially as for different times of days and different strategies you might be trying. I wanted to make one last point. We talked about journaling a lot lately, and I wanted to make one last point about this because I know I've been talking a lot about, have a spreadsheet and collect data and have columns pertinent to your strategy and collect all these numbers and yada, yada, yada. So you might be wondering what you do with all that stuff in the end. We talked about that a little bit during the webinar this week. But I just want to give like a simple example of what you can do with that information. And if you guys are familiar with Excel, we did talk about how you can filter on rows, and you could filter to all your trades that, let's see. Well, it could be a dollar amount for the stock. You could filter to all the trades for stocks over $200 in price, and you could see like what's your profitability like there, or filter to the ones less than $50 and see what's your profitability there. There's a lot. If you are familiar with Excel, you can filter on any column, and if you're not, you should. It's a good thing to know, and you can play around with the numbers quite a bit just by doing that. And another thing you might be curious about is something like RVOL, for example. Like a lot of people want a higher RVOL stock to trade. They prefer that a lot. I always hear I want an RVOL over 100, which I understand. It sounds good, maybe there is something to that. So what I did is I took all my trades for 2022. I've done this before, and I've got the same result. I'm happy to see. But I've done this for a larger data set before. But I took all my trades for 2022, and I created a scatter plot of RVOL and R. And it's the same conclusion, like I said, that I've come to before, that RVOL doesn't seem to have a particularly big impact on my trading. And you might wonder why I keep collecting the number. I don't know. That might be a good question. I'm not sure it's meaningful at this point for me to keep doing it, because we talked about, when things start to become not like useful entry criteria, perhaps you shed those things so that it's not a burden on you. But I don't know. I'm just kind of a numbers guy. So like I've said before, every day I take my numbers sheet, and when I enter a trade, it's just habit. I write down the volume and the RVOL. So I've kept doing it. But I'm happy to see that I've kept doing it, and I've made yet another scatter plot that shows like it's not really a big impact. You can see that's weird. They're labeled incorrectly. Huh. Heath noticed that.
You're putting the RVOL in percentage-wise or in integer or number, though, so without percentage?
I actually don't know what I did now that I'm looking at it.
Yeah, maybe the X's are the other way around.
I think what it's saying is this is Arvol. This is 200%. This is for fuck it.
John, if I remember correctly from last time, I think just the labels are mixed up. So I think these are your R's, and your R vol should be at the bottom, and these are the percentages, no?
I don't actually know. I'd have to without fumbling through this in front of you, I'd have to go back and look. It's one or the other. No, this is the R's. These are R's. I'm sorry. I don't know how it switched the labels, but I know it is because of all the break evens. Do you see how many dots there are around 0? R. I have a ton of break even trades, like a lot of break even trades. They make a bit of a run and they come back to break even and I get out. And you can kind of see the base here around -1 R, because I shouldn't be holding past -1 R, right? So that's kind of the base. You can see this one might be a little bit past. I've got some slippage on that one. This one's around -1 R. Yes, so this is R and this is R vol. I don't know how those got switched, but in any case, that means 100% R vol is kind of running through here. And you can see below 100%, we get some really good trades. And just above 100, we get some good trades as well. But there's really no distinction that says, like, when I get up into the higher R vol, like out here, I'm up around 450, and that's a break-even trade. And there's another one, geesh, way up here at almost 1,000. That's a break-even trade. And then actually, I seem to do worse above 200%. I mean, a lot of losing trades here. So, point being, it's just like a quick visual way to kind of get an indication of, scatter plots are really good for that. You just take 2 columns of data, and a good thing to compare is to your R, what your result is, and compare. I could compare the volume, the other number I get on the sheet. I could compare R vol. I can compare the stock price, etc. And you may see a relationship that suggests that as one thing increases, the other thing generally increases, or you might not. If there was like a good relationship between R vol and R, you'd see like an upward drift in the dots. They'd kind of move from the lower left to the upper right. Or if there was a negative effect, you know, as R vol increased, actually I made less money typically, then you'd see like a downward drift in the dots. But there's really nothing here. So again, maybe an uninteresting result, but I don't know, not really for me. It is interesting for me because, again, R vol is one of those things that's always on my mind. I hear other traders say, like, I want a high R vol, and a lot of people use it as a screening criteria. I'm not saying you shouldn't. I'm just saying in my particular case, it doesn't seem to be particularly important. And I think that's because I trade the same stocks so often that I'm pretty good at recognizing an interesting opportunity in a stock that may not have a high R vol. It could be NVIDIA at 60% per the day on R vol, but I just kind of noticed it doing something interesting for a 20-minute period where there's a chance to get a good opportunity. And, you know, it's not something that really increases the R vol in the moment and kind of stays low for the day, but the opportunity is there nonetheless. Anyway, I'm sorry for the confusion. I have no idea how I could switch the labels around, but that's definitely R, and that's definitely R vol. So, confusing. I meant to put this at the end, Dima. We're going to go past this if you don't mind, Dima.
Absolutely, yeah.
Okay.
We'll leave it till the end.
All right, so the theme of this week is initial strategy identification. And again, look, we're all on different paths here. Some of us came in fully knowing what we want to trade. Other people came in not knowing how to place a trade or use DAS or ever traded. So obviously we're on different paths, but around about now, even if you came in pretty fresh, it's about the time to start thinking like what works better than other things. And not that you have to focus. We talked about the exploration versus data collection kind of paradigm of boot camp. Yeah, I can't remember the other word I used. Exploration versus like commitment to a strategy. It's not that you have to be committed to anything this early, but it is a good time to start thinking about what feels good and perhaps what doesn't. And just starting to rank your strategies a little bit. Like, I think I'm feeling this one more than others. But I wanted to use this week as an opportunity to talk about some of the strategies we're trading and why we might recommend them to others or perhaps not, why they might fit with certain types of people and maybe not so much for others. So I just made up this this little template here that, not to discuss strategy so much, like not the ins and outs of it, but these bold-faced kind of elements here, like how did I discover it? Because people wonder, how the hell do you come up with a strategy in the first place? Do you really make one up on your own, or do you take one from someone else? And I was thinking more about it today, and I was thinking like, mine really is just a variation of the ABCD, and that's a basic strategy. When I joined Bearable Traders, it's one I had read in Andrew's book. It seemed very simple. In fact, I think it's recommended in his book as a great strategy for beginners. And I remember trying those for sure. And I know what kind of always bothered me was, I don't know, I like when things are a bit more obvious, and I guess I was more drawn to an ABCD with a bit more confirmation that it was actually working. So you imagine an A, B, C, D trade when you're supposed to enter between C and D. I never felt comfortable there because it was always like, I just want a little bit more confirmation that this thing's moving, which kind of pulled me up toward the high of day because, often that's where B was. I think strictly speaking on an ABCD, B is the high of day. And that's how did I modify it to work better for me? That's what I did. I just wanted a bit more confirmation something was working. Now, that's to say, if you compare me to a really good ABCD trader, the ABCD trader is going to make more money because they enter earlier, perhaps, right? Well, it depends where they get out as well. But it's not to say one's right or one's wrong. It's just kind of where your preference is to take the entry. In fact, a lot of ABCD traders partial at the high of day, so they're already taking money off where I'm getting in. So, for all I know, we kind of make the same money out of a similar idea. I think the best time to trade, I put this in here because we're all constrained in different ways by the market day. Some people only have the morning to trade, some people have all day, and some people actually only have the afternoons. So I think the best time, honestly, to trade it is between 9:40 and 10:30. There were high day breaks all day today, as you might imagine, as the market drifted up, but they are more obvious in the morning and they take longer to play out as the day goes on. I think this is important. This is a question because people ask this a lot. Like, what's a reasonable expectation for the average number of acceptable setups in a day? I think it's about 5. I mean, I won't say I'm good at many things, but I'm pretty good at this particular strategy. And I just keep, as I tally these up every day, I'm getting like 5 a day, almost on the nose. And that could also, that's probably also like where I'm calling it quits profit-wise, so that they would factor into that. I guess there could be more acceptable setups, but I'm not looking for them anymore. But I think 5 is a good expectation. And then, again, not to get into the strategy fully, but just to kind of put out there, what are the 3 most important things that make it work? And I tried to phrase this a little different than my webinar, but I think there has to be an appreciable increase in buyers as the price goes to high a day. You got to see more interest coming into the stock. I talk in depth a lot about volume and different volume patterns you might be looking for. But really, what are you talking about there? There's more interest. There's more buyers coming in. There's more faith and optimism as it comes up to the high a day. That's kind of what you want to see. I think it's really important that you don't go hard against the SPY or the Qs, and you can pick whichever one you want. It tends to make more sense if you're trading Tesla, the Qs might be better because it represents a bigger portion of the Qs than does the SPY. You can think along those lines. But in any case, I see a lot of traders trade hard against the SPY sometimes. The SPY is clearly rolling over and dropping, and people see a long. I almost never think that's a good idea. But I think for high days, it's a particularly bad idea because it's a point of contention. It's a very interesting level. And there's a lot of people wondering if it's going higher, and there's a lot of people wondering if it's going lower. And the lowers tend to win out when the SPY is crashing, so it's best not to trade real hard against it. And then I think the third best thing is probably that pattern I'm always looking for. Like a strong exponential move up to the high day. Not necessarily the creeping linear move to the high day, which I've been taking a couple of lately out of lack of other options, but I know in my heart that it's better to see as the buyers come in and that increased enthusiasm there that it's pushing up in a punching exponential pattern. Is it good for beginners? I think it is because it's easy to recognize. That's the best thing about it. It's very easy to describe to beginners, but people do tend to struggle with that. I didn't phrase this as well as I could. People should be abandoning the trade when it does not work out as quickly as it should. That's kind of the point. Like you can't stick around in it too long, and we've talked about that in the webinars, and so I won't belabor that point. But you can't hang out in it too long. It should happen kind of quickly. And then other thoughts on the strategy. I just think it's a good strategy for people who want to know if they're right or wrong pretty quickly. Some people don't need that, and they can really tease out a trade and an entry for a long time and with a lot of patience. I tend to get a lot of self-doubt after I enter something and it's not working out. And too many thoughts run through my mind about why it's not working yet, and I start to look at too many reasons why this could be working against me, and it tends to scare me out of the trade often. So it's better psychologically for me if it's just confirmed sooner or later whether it worked out. So, okay, so I talked way too much about that. We've all heard too much about the high day break strategy for sure. But we have, is Amir here?
Yes, I am.
There you are.
Hi.
So you're going to talk about your falling star.
Yes, I can. Hi, everyone. I'm trading for about a few years. So, and most of the years I'm doing short. Probably 90% of my trading are shorts. And in the beginning, I didn't short. I never shorted a strong stock, stock that get significantly high. And in the past 1 or 2 years, I started to do it. I think there is a good potential there, although it may be risky because a gapped up stock usually gapped up as a reason, and it can squeeze upper. So I can follow your items as I explained how did I discover it. How did I modify it? I think I just look at even the stock have a significant gap up. I can look at it just to see the pattern intraday, and not avoiding the gap up, but just to see the intraday pattern. And for me, usually the moves are there are some moves, and I gave some examples that the moves are quite significant, and the entry for the short entry is easier because there is no if you are shorting significantly gapped down stock, you have the SSR rule, so it's hard. It's a bit harder to enter a position, and with the gap up, it's easier. I can find usually, I think that the number maybe between 2 and 5, 2 and 4, such setups, usually in the beginning of the day. And I gave the few important things for me, which is significantly above 8% gap up, with a bigger relative volume at the free market and good price action. Preferably, if it shows weakness at the free market, that's a good sign, because it's telling me that it might continue the weakness after the open. And I'm looking for daily support or pivots that will allow a significant move. Usually when the gap is a big gap up, so there is usually enough space for it, sometimes even to close the gap. Is it a good strategy for beginners? Probably not. I think it's and I had cases that the stock squeezed up, and it's a risk that we have to take into consideration and to follow our stock. That's it, I think.
So you have some examples here.
The left example is from today. The ENPH, the left one is ENPH. I didn't short it because I just didn't notice it. I was occupied in some other stocks, so but it gave really nice pattern for we can see a 5 minute opening range breakdown, and gave a really significant move. What I did with it is when it's bottomed, I took it for a bottom reversal, which was okay. And this is something that I'm also doing. And in the right side is AMD from a few days ago, also gapped up and did a nice 5 opening range, which I took profit probably too early, but it's okay. As long as it is profitable, it was okay. That's it.
Thanks, Amir. I appreciate your honesty that you think it's not particularly for beginners. I have one question. Do you think, you said it's a good strategy from 9:30 to 11. Do you think as it gets a little further away from the open, it's a little safer for beginners, or is it still not so good?
It depends where the stock is. If the stock is near the VWAP and consolidating near the VWAP, it may move. It may break and get the move later. So it is possible.
Okay. Appreciate that. Thanks, Amir.
Great, thanks.
Jahar, are you out there?
I am, yes, sir.
All right, you're up.
Sweet. So I too am trading the high day break, and how no, thank you, gracias. How I discovered it was I went to all of the sessions that y'all provided up front, and I thought I wanted to trade ABCD, but I tried during the kind of pre-open time, and it just looked like a zigzag. I couldn't see it. Still can't. So I figured the high of daybreak would be easier because it's an objective number. And John, I listened to you, and I think that you tend to enter like after the 4th-ish candle. But I have found that at that point for me, I have kind of let it go too far. And I've even noticed that I've tried to enter at like 6 or 7 candles, and I'm like, ta-da! And it's way, way, way too late. I uncluttered my chart, because I can't read it. So all of the extra lines and things and the VWAP and all of the stuff was just too much for me. So I just went and I also stopped using the alert to ding because it was overwhelming. So just a line that says, hey, here's the high. So I can just visually glance at it and see it. And then I think the ATR might be useful, but I haven't 100% figured that out yet. I do prefer the first hour when the market is most volatile. I think it can be traded later, but that requires more patience, which I'm also working on. What might be profitable in 3 or 5 minutes during the open might be like 20 plus minutes in the afternoon. What's a reasonable expectation? I think it depends. Because I'm just trying to find a high of daybreak and 3 candles. And that could happen, 24 times. That could happen like twice. It just kind of depends on the days we've seen lately. But I think I'm averaging maybe 1 or 2 from the 12 stocks total about every hour, give or take. And most important things, I think you have to be patient. Like if it's close-ish, but no cigar, like that doesn't count. Like it needs to actually break the high. And then time. I thought that I wanted to try like in the first 5 minutes, but so much happens that it's hard to see what's headed up and what's headed down. And then I think market awareness I've learned in the past week or so is important. Like if this high is trending down and it's being pulled down, that's not a good time for a high of daybreak because you might get a candle, but 2, 3, like probably not. Is it a good strategy for beginners? I absolutely think so because I know nothing before coming to PCT. And it was very easy for me. Like if the high is 170, if it's 171, yeah. If it's 169, that's not a high. Leave it alone. I think where people could struggle with this strategy is that it's really hard, and especially as I've noticed as the day gets later at 11, 12, 1 o'clock to see a stock on a great run and be like, yeah, oh, wait, like it's miles away from the high and not get into it. Also, if you're like in the chat room or in the Slack and other people are like, man, I just had 5 hours on this trade and it's 9:32. And you're like, I haven't even got my setup yet. So just making sure that you're actually sitting and being patient because it's an easy way to get turned upside down if you're just jumping in because other people are.
Yeah. So when you say you enter on the 4th candle, do you mean, are those candles that are making the run to the high of day or are those candles after the high of day?
After the high of day. So high, okay. Candle 1, 2, 3, and then I will enter on the 4th.
I like it. This is exactly what I want to see people do. I really prefer, if anyone tries to trade my strategy, that I immediately start to see some like preference divergence. You know what I mean? That you see things. I think you're seeing things for yourself, and that's awesome. That you don't want to get too locked into somebody else's idea. It's a great starting place, but don't become overly fixated on how like I trade or someone else or Mike does this and set your own path. I think you're doing exactly that, and it's great. And I really like you're having thoughts about ATR. Does that matter? That's great. I mean, that's the kind of thing you can put into a spreadsheet. You can every trade you can gather like what was the ATR for this stock, and you can put it in there. And we talked about this last time. You can kind of decide how much of the ATR maybe it was. Excuse me. How much was eaten up by the time you got in it, perhaps. But whatever. There's ways you could use that number to decide. Water down the wrong pipe. Whether or not it's something you need to consider, and that's great because I don't use ATR. And I'd be very interested to hear what you find out, during boot camp. So this is good. What else did I like here? You said something else. Well, I like that you ditch the alerts if they're not working for you. Then great. Some people have a hard time with those because they go off and it's almost like a Pavlov's dog bell kind of thing. And you're like, all right, the alert went off, so it must be a trade, and it's not the case. I have to remember that sometimes myself, especially on a day where I'm not getting many opportunities and an alert goes off and I'm like, finally, something's near a tie of day. Let's do this, And I got to like pull back, put the brakes on and say, don't get into something stupid. So this is fantastic. Thanks a lot.
No, thank you.
All right. I think next is, I guess I thought I put Ricardo toward the end. I did not. All right. Let's do this, Ricardo.
Sure. I don't mind waiting for the others to speak. It's totally okay for me.
Go ahead. It must be fate. Sorry.
Okay, I'll skim through it real fast. So I'm working on the ABCD strategy. I heard about it through a bit every channel that I started looking at when I started getting interested in trading. It's one of the strategies that I heard about the most, and I decided for this bootcamp to try to see if I work well with it or not. A bit like John said through Andrew's book as well, and communities. How did I modify it to work it better for me? I really like multiple time frame alignment. Ayman talked about it a little bit. I don't know how many times I already heard his trade book ABCD strategy video, but it's something that I kept on my mind. Not just multiple time frame alignment. If you see the ABCD pattern in more than one time frame is awesome, but also higher time frames be trending on the same direction of your ABCD. So if it's an ABCD to the long side, if it's a reverse ABCD to the short side. Best time of the day to trade it. I'm still figuring out this data set for myself. I think it's a tradable strategy throughout the day. The good thing is that you can play around a lot with ATR. So even if the ATR is almost covered, you can play the ABCD or the reverse ABCD depending on if the stock started, let's say, at $20, the ATR is $5, reaches 25, you can still play the ABCD to or the reverse ABCD to the other side, and it can still be doable. Reasonable expectations for the average number of trades, complementing with my earlier answer. I trade around 3 or 4 per day. I'm trying to keep more or less this statistic, but again, ABCDs also generate ABCDs. Watch out on how many legs you try to do it, or how far the first ABCD has already gone. That's also important. But as I said, the ATR can play a big role if you want to play the reverse ABCD on the same stock. The 3 most important things to make it work. I don't know if those are the most important, but 3 that I think are particularly relevant. As an indicator, seeing it in multiple time frames, as I previously said. Entry, you should wait for the end of the pullback. It's something that I'm working on because I'm really impatient. So let the pullback come to an end, set a low or the lowest low of the pullback, let it pierce a moving average or another relevant point, not specifically moving average, can be previous day close, specific key level, and then let it create a higher low and work from there. The third point that I want to mention is the risk management plan or target. As I said previously, I'm currently looking at the average true range, how far of the average true range was already covered, so that you can set good targets and see if the risk reward still is available or it makes sense for you to even jump on the trade on the first place. Where might be, is it a good strategy for beginners? I'm a beginner and I'm at least discovering the pattern. I can see it relatively easily, but the more I practice, obviously, the more I see it. But on the contrary, I think I also suffer with the disease that I'm seeing ABC patterns everywhere, on every chart, even on my serials, I see ABC patterns already. So watch out with that, because there's a set of rules that they need to comply with. Where people might struggle, as I previously said as well, is patient to enter. I normally enter close to C. John doesn't like to enter close to C. He likes to enter close to B on the variation of ABCD. So for me, where I'm struggling, it's where I advise you to be careful with as well, is actually being patient to enter, let the pullback show its lowest point, and then start figuring out if it makes sense to enter from that point onwards with a good risk to reward. If you could move to the next slide, please, John. This is an example of today. It could have been better. Again, I suffered a little bit of impatience problems. So I was seeing SOFI today. The R-vol was actually low when I entered, was around 75%. Something that I'm starting to track as well, if it's a necessity or it impacts positively or negatively the ABCD. As you can see on higher time frames, looking at the 60-minute chart, I placed an arrow there. The stock was uptrending since yesterday. Okay, so that's a good indication for me. Okay, so the uptrend, I hope it continues. SPY was a mess in the morning, which I don't know if it helped or not. Probably not, because at the moment that I entered, SPY placed a shooting star. So that was bad. My entry itself was also bad due to lack of patience, because I should have waited for the pullback to end. It's not normal that it ends on the light blue, which is a 50 SMA on the 2nd-minute chart. It normally comes back lower, at least 9 EMA or 20 EMA in the 2-minute, or even VWAP. So I was a little bit impatient. I paid the price and got stopped out. So this is just a simple example of today. And if you have any questions, please shoot. If not, John, you can pass to the next one. And thank you very much for the opportunity of sharing.
John, can't hear you.
Thank you, Dima. Dima's my microphone checker. I had a question. Ricardo, do you find that ABCDs work best when the run-up is very strong and the pullback is also kind of strong? We get a very obvious run-up and pullback. Do you find those are the better ABCDs, or the more obvious ones to work out?
I don't know what you consider an obvious run-up or an obvious pullback.
I mean, well, I just see them. Usually, I see them better when the run. I'm looking more for like. It would be like, this is a pretty strong run from the low a day here up back to the high a day.
Yes.
It's very obvious on the 5-minute. And it's strong on the 2 as well. You can really see the second half here go up quite strong. If that had been followed by a rather harsher pullback, a more obvious, faster pullback on the 1 or the 2-minute, I'm just asking, when you see a good strong run up and then like a V reversal kind of pullback, do you find those to be easier ABCDs to work out? Or maybe it doesn't matter.
I think I find it more difficult, actually, because one of my problems, or that I'm finding, or that I'm having struggles with, is trading really early, because on the until 10 in the morning I'm looking at the 1-minute time frame, and I tend to see, or at least on the last week or so, the pullbacks were way stronger, and it doesn't look to me that much as a pullback, to be honest. I like it to be downtrending, but more calmly, rather than that aggressive as you said. So my answer is no. I prefer a calmer pullback.
Okay, gotcha. Thanks. Nathan, are you here?
Yeah, I'm here.
There you go, buddy.
Can you hear me?
I can, yeah. Can you take us through your thoughts on the ABCD?
Okay. On the time frames for the ABCD, I usually like it in the morning when there's more price action. Things a little bit more volatile. Around lunchtime, it seems to drop off, and I don't think there's any reliable patterns there. And it kind of picks up a little bit, not much in the afternoon. I like to find a trend when it starts coming up, either off of a reversal for the day, and it comes up and hits the 9 moving average. I usually like take it there with a stop at the 20, or if it usually hits that a couple times, and then pulls on back to the 20. Then I try then just for a stop just right below the 20. I would prefer the candles to, as you're talking about the Ricardo a while ago, the sharp pullback. Really don't like if they're volatile. Really don't like that. I usually turn away and look for another stock to try to play. Usually I prefer about 2 or 3 candles kind of curving back over to the 9 or to ready to bounce off. And I think it's pretty easy pattern to spot. I mean, I've been watching patterns. I've been watching charts for since April 2020. And I really haven't noticed it until I started joining the PCT and where I gained focus here. It's where I started really noticing it. Before I was just trying to drop by every pullback. Where I struggle with is like today, where it started off with a kind of a chop, and I couldn't tell which direction the market was going to either go long or short. There ain't much there, but that's pretty much all I got.
Can I ask you a question, Nathan?
Mm-hmm.
When you speak about the 9 EMA, which time frame do you normally use for your ABCDs?
Usually 1 minute.
Okay, thank you.
So, thanks, Ricardo. I was talking on mute again, of course. I think it's interesting. You have this thing here where it says where people might struggle is where to place the stop. Do you not place your stop below like C? I know that's pretty common for ABCD traders. Just once you get a bit of a move away from C closer to where D would be, then they just put their stop below C. Is that not how you usually play it?
We'll see where the stop. It's like if I try to put it at 9. Say the C is at the 9. I put my stop down at 20 because generally sometimes it'll pull back to the 20 and either maybe pierce a little bit. So I have my stop a few cents below it for it to go back up, because sometimes the C isn't at the 9. The C pulls back to the 20.
Gotcha. Okay. I thought it was interesting also, you like it best between 9:40 and 10, and then you like this 2-hour break. It seems like then you see more opportunities in the afternoon.
Yeah, lunch just seems to either, I mean, the stocks change patterns between the different times of the years, but it seems like during the lunchtime area, it kind of either consolidates or there's no enthusiasm in the stocks.
Yeah, no, I can see that. Yeah, used to be a lot more fun to trade the afternoons. Some of you have probably heard some of the moderators, if you're in Bearable Traders, talk about that. Hopefully those days come back. It kind of felt like that today. So it was a fun afternoon, a nice strong close for a lot of stocks. Cool. Thank you, Nathan, very much. I like to see these two ABCD ones back to back. I didn't do that on purpose.
No problem.
But here's another one. Oliver's ABCD. You out there, Oliver?
Yeah, I'm here. Can you hear me?
Yep.
All right. So, yeah, I'll just go kind of quick because since we've had 2 of them right in a row. I've obviously heard about ABCDs for a long time. It's kind of one of the first strategies in Andrew's book, and it seems like everybody has a video on ABCDs at some point. But I really kind of focused on it by a lot of trial and error. I tend to have a really bad habit of getting in trades right at the top of the trend, and then I wouldn't be able to survive the pullback once they inevitably happened. I get stopped out, and then I'd have to try to re-enter if I wanted to at a worse price usually. So I kind of force myself, wait for an ABC pullback. That's kind of how I focus on that strategy. Like if it doesn't give me that pullback, I won't enter, and it's just kind of a way that I did that to kind of like save myself from getting stopped out all the time. I did kind of modify it. I like to combine it with other strategies, like for example, if it makes a 1 minute ABCD at the open, and that can a lot of times coincide with a 5-minute orb. So I kind of like multiple strategies inside a strategy. Another one I like, you can take a reverse ABCD and maybe on like the 5-minute, it'll be putting in like a 3-bar play. So I kind of like multiple strategies at the same time. It's just a little bit, I find the success rate is a little bit higher when I do it like that. It can really be traded anytime, although I probably should have put after like 5 minutes at least. It's kind of hard to find a ABCD right at the open, but I tend to not like to stay on the 1 minute chart. I try to use that until 10, but after 10 o'clock, I feel like finding ABCDs on the 1 minute is really becomes unreliable, and especially it can chop up and down. So I kind of switch to the 5 minute at that point as my main entry chart, and then afternoon if I'm still trading, which is very rarely. I can switch to the 15-minute if I want to keep going. I think probably about 3 to 5 is a average number, seems like. So these 3 points are kind of like a personal thing to me. Stock and play, I want the stock to have good volume. ABCD is kind of a breakout strategy. So the more people that are trading with you, the better. Good pre-market action and trade in the direction of the trend. So I like to look at the higher time frames, and I like to combine it with like a strong daily combined with a strong 60, and that will give me confirmation to take the ABCD in a long position. In that case, I don't like to go against the higher time frames. It's just a personal trade. I think a lot of people can be successful like going against the trend, but I tend to try to go in the direction of the higher time frames. And then combine it with other strategies, like I said, it's kind of just an extra confirmation. More people that see strategies seems like a higher success. I think it's yes and no for a good strategy for beginners. I think the concepts are fairly straightforward, but I think it's kind of, it can be kind of like a reversal trade in the sense that once you start looking for reversals, you can kind of see a reversal everywhere if you look hard enough. And I think ABCs are kind of like that. If you look hard enough, you can find pretty much an infinite number of ABCs D trades during the day. So you really have to, it can be prone to over trading, I think. And let's see, over trading, I think paying too much attention to the 1 minute chart can throw you off. And so you have to find a way to limit your trades to like really your A+ setups. And then just over the thoughts, I think it's one of the first strategies you'll learn, but it can also be really tough to master. And that is about it.
Thanks, Aller. Any questions for Aller?
No, not for me.
So I have one question. So you tend to, so the day starts, you might be on a 1 minute, some more time goes by, you switch into the 5 and maybe the 15 later, it sounds like. When you go to, sorry, go ahead.
No, go ahead.
Well, when you go to execute, do you go back to a smaller time frame to actually do the entry and play it out, or do you use the time frame, the larger time frame you've drifted to execute?
No, I'll probably go back to the 1 minute to like place my stop.
Okay.
But I'll only use the like say if it's after 10, I'll make sure like the ABCD is forming on the 5 minute.
Gotcha.
And not only the 1 minute.
Yeah, very good point. As someone else made this point already, I can't remember if it was Ricardo or someone else, but yeah, the ABCD is prone to, like, you kind of do see them everywhere.
Yeah,
this is one thing you got to be careful with in this pattern. I mean, stocks go up and pull back all day, right? There's got to be more to it, which is what you're saying there. Yeah, there's got to be more entry criteria, get it closer to that A+ setup. Yeah, totally agree. The same thing with high days. There's lots of stocks touching their high day. It doesn't mean that they make good high day break trades for sure.
Right.
Awesome. Thanks, Oliver.
All right, no problem.
All right, next we got Dash. Dash, I'm gonna just bounce by you for a second to go to John O and Tracy, and I think we'll have enough time for everybody. No, John O's not here. No.
Yeah, John O is not.
Yeah, no, never mind. So I think we just have 2 more. So Tracy, are you out there? Maybe not. No, he is. You're on mute.
Yeah, can you hear me?
Yep.
Okay. For some reason, I just lost this. There it is. So basically, I have the ORB and the sorry, I'm trying to get my screen back. There it is. I have the ORB and the ABCD. Sorry, I kind of had to throw this together because I just got home in the last couple of minutes, so it's kind of basic. But I do the ORB because I can only trade for about the first hour and a half in the morning, and so the ORB kind of helps if you can catch it in the first 5 minutes. But if nothing's really set up with the ORB in the first 10 minutes, I just kind of start looking for an ABCD pattern. and ABCD tends to roll into that pretty well, I think. But I generally don't look for an ABCD pattern until about 9:45, because I've noticed actually the best patterns are around 10:30 when I got to start getting ready for work. But generally, I don't see an ABCD pattern until around 9:45, 10 o'clock. It's just the way the market's been so choppy lately. The ABCD pattern can really screw you up if you're not taking an A setup. It has been for me anyways. But so the only way I really modify the ABCD is, well, first of all, I keep it right on my desk so I can remember it. But the only way I really modify it is ABCD sometimes works more as a lightning bolt pattern. So I won't take 4 1-minute candles in the B to C. I'll take maybe 2 or 3, and then it's more of a lightning bolt at that point. But if that's the way the market's moving, I kind of tend to take it, and it sort of works about 50% of the time. Sometimes it doesn't. So I'm waiting on more data to see if that's actually going to work. I generally trade off the 1 minute, but I have the 1, the 2, the 5, and the 15 up all the time, so I can trade on the smaller time frame, but also be looking at the larger time frame. The ORB, the really thing, I think it's just going to take more practice to get better at it. The ORB is the biggest thing I've noticed is you can't listen to the chat room because those guys are really experienced, and I generally take the opposite trade of what Andrew does, not by choice, but I just happen to, because if for some reason I work out better when I take the opposite of what Andrew is. I don't know why. Maybe I'm taking the reversal off of his bounce or what, but you just can't listen to what he's doing because he's faster, he's better, and he can read the market better. So the most important things I think with this setup is the patience. Stick to your entry rules and don't force the trade, because like everybody's been saying with the ABCD, you can see it everywhere if you want to, but a lot of the times it might be a reversal, it might be something else, and it'll stop you out, especially the way the market's been so choppy lately. It could chop you out pretty quick. So, and when I have time to sit and wait all day, I'll probably get some more A setups. I think that's going to help me out. But right now, I'm sort of, maybe I can catch an hour in the afternoon and an hour and a half in the morning, but that's about it. So my biggest struggle has been pushing the trade, and I get into stuff that I really shouldn't have, but I'm kind of pushing it because I feel like I don't have enough time left. So, but that's about it.
Oh, thanks. Yeah, no, it's not a unique position to be in. A lot of people have an hour to trade, hour and a half, and then they gotta get going on with the other aspects of their life. So you've got 2 strategies here for sure that fit that time of day. So that's good. Yeah, the ORB is tough.
You can make some serious R in a quick amount of time, but you really got to be trading with the market, and it's hard to read the market if you're that pre-market. I'm just not good enough at it yet. I'm just not.
Well, it's meant to be tricky and deceptive. I mean, the pre-market will so often make it look like something's running up, looks strong, does the exact opposite, and then okay, so I'm going to do the opposite the next day, and then it keeps running into the open. It's so tricky. That's why I personally stay away from it. But on the other hand, I've never devoted like a lot of time to try to figure it out. It just, in the beginning, it was just costing me a lot of money, and I just kind of drifted away from it and haven't gone back. But yeah, you're right. But what does it mean when you can get a big move? That means your stop should be big. That's the thing, and that's the thing that some people don't want to do sometimes. They're like, because I can get a $3 move on this stock, right? If I use a 25-cent stop, I can buy a lot of shares and get that $3 move. That'd be awesome. And it's just the market generally, for whatever move you can get, you have to have an acceptable stop size on the other side. That's volatility. That's what volatility is. If a stock is volatile enough to go up $3 in a candle or two, then of course it's volatile enough to do the exact opposite in the other direction. So you have to give enough. And that's where a lot of people struggle with the ORB is they want to catch it. You know, I'm going to put my stop underneath this 1 minute candle, and it's just it's cutting it too close sometimes. And then when it does move against you, you know, people kind of, you know, the dirty truth is a lot of ORB traders don't use hard stops. They use manual stops, and it can mentally mess with you and get you into a bad place. But don't let me, you know, I'm not trying to poop on the dream here, but but it's tough, yeah, for sure.
No, I've noticed that you know, my rule is not to take ORB until the third candle, but I'm looking through my data and I'm seeing at 1 minute and like 9:31 and 30 seconds I'm taking the trade. And I don't even realize it. You know, it's just, so I'm taking it too early for one. I'm not confirming it. And I'm a big volume guy. Like I'm going through that book right now. So I want to confirm with volume as well. But volume is so strange in that first 5 minutes. It's hard to read that as well. So it goes so fast. You don't have time to confirm your trades. So I'm getting used to it, but you know.
Yeah, it is hard. The first volume distinction I can ever see is what I call pivoting volume. When I see the big first candle and then volume drifts off for maybe 3 or 4 and then it starts to pivot higher, that's the first, when I talk about like appreciable volume events that I will trade off of, that's the very first one that can exist in the day essentially is the pivot. And it won't happen until usually the 5th or 6th minute of the day. Yeah. But thanks, Tracy. Appreciate it very much.
Mm-hmm.
And I think that leaves Mr. Dash. Where'd he go? You out there, Dash?
Yeah. Can you hear me?
Yep.
Okay. Yeah, so mine is the VWAP break strategy. I think I should start renaming it to break down because it's a short strategy. But basically, I was trading before the boot camp, and I started journaling for like 3-4 months. And based on the data I had to choose between VWAP break or lightning bolt. For some reason, I was just like, my intuition worked more with VWAP break, so I just picked it and ran with it. It's a combination of like a reverse ABCD and a mountain pass. So it's, if you imagine a mountain pass at the VWAP where Peter basically takes a partial, that's where my strategy starts. And for an ABCD where the second ABCD fails, the C is where my strategy will start. So that's how I imagine this. I am creating a lot of the rules myself right now. A lot of journaling and data collection right now because it's new for me. For time, yes, after 9:35, I hate trading in the first 5 minutes as well as the pre-market. I've been chopped up enough times now that I've realized that it's not worth it. And then I put down 3 as a reasonable expectation, but it comes down to what the market is giving you. If it's a green day for everyone, I might not even get one good trade. So it all depends on what is happening. And then the most important things to make it work is failed ABCD or reverse ABCD and then a mountain pass on the chart. I need the price to break VWAP with heavy volume or increased price action. And then I also I've started trading using just L2 and tape. I'm actually drifting away from even looking at the charts. Once I enter my trade, once I have my confirmations and everything, I will focus only on the L2. I'm using L2 even for partialing. I came up with the motto, follow the orders. Wherever L2 shows the highest orders, that's where I will even take partials. So while entry, the L2 has to be stacked on the downside. I think one of the examples in the next slide shows that. A good strategy for beginners, it could be, but I put no here because you need to identify what a failed ABCD looks like. And especially also L2 and tape reading, I think is crucial, especially for a good entry. Otherwise, with a bad entry, it becomes very difficult for risk management. That's what I was facing up until like 2-3 weeks ago. Even sometimes even now, with a bad entry, you just can't like manage the trade properly. This short strategy, it works really well if if the stock continues to go down. It's like it touches VWAP once in a day and then never touches it. Then you got probably a 10-hour kind of day right there. So yeah, that's it. And then next slide has the examples. Yeah, so the first one, sample one, is like a mountain pass. So like you can see that it broke VWAP and I entered, I think I entered right at VWAP. But it's a failed, it's a mountain pass. It's a continuation of the mountain pass. All I'm looking for is for it to touch the low of day, which I think it didn't touch here. And this is an old example. I was partialing like anything here. But that's a mountain pass based example. The one on the right is a failed ABCD based example. Again, it broke VWAP, and that's when I enter, and I show on this one how the stacking works. There's 25 on 2550. There's a big order sitting right there, and then when it approaches 2550, you can see that bearish sign. That just prompts me, okay, I can get into this now. That helps with the initial push that gives you a buffer for your stop. I can probably get out at break even if I start seeing orders stacking up on the ask. So yeah, that's it. Any questions?
Questions for Dash? I like that you have something here completely unique, Dash, and not that I don't like people trading ABCDs or ORBs. I do. I like everything, but you're off on your own here. This is like unknown territory. Not for you so much, but for anyone else, right?
Yeah.
So it's cool. It's interesting, and I think that's great. I think especially when you get a good amount of market time, you start to see. We've kind of talked about. I think I see something. I think I see this thing that seems to be repeatable. I'm going to go test that and see if that actually is something that is repeatable is maybe not the right word, but is there an event that you can put more probability in Dash's favor than the market and try to come out with a winning situation?
Yeah, I mean, I think it's fairly repeatable. It just sometimes I don't take enough number of trades, but I think I crossed 100 trades just on VWAP break yesterday. So I think it's repeatable.
For boot camp or for like ever?
No, since for like maybe past 2 months, little prior to boot camp and then boot camp as well.
Gotcha. Because actually,
combined.
Yeah, I was just going to mention as we kind of wrap up here that hold on, let me get everyone back on gallery view. It's my favorite. You can see everyone's face. We are 10 days into boot camp, and for those 10 days, I've traded myself 32 trades. So I'm getting like 3.2 trades per day. And, we mentioned earlier about this whole idea of collecting data and kind of confirming or denying the things that you think you're seeing. I mentioned in the beginning, if you could get 3 trades a day, in a month, you get 60. In 2 months, you get 120. And before you know it, you have a nice data set. And it accumulates very quickly. It feels like it's a slow process. But you'd be surprised at the end of a month, you're like, man, look at this spreadsheet. I've got some numbers, I can get after this ATR question. Let's go try to figure out if, for Johara, does ATR matter? Like now we've got a data set. Now let's go look at that. And I'm like, oh yeah, look, it kind of looks like it does matter. So like, let's keep that in our trade book. That's the process. So I do got to get running. Thank you very much, everyone who put something together. I'm sorry I put that out so late. The week got away from me once again, but I really appreciate it. I think that was a great discussion, and thank you everyone for doing that. And I hope if anyone's still looking for something, then maybe that was helpful. But I learned a lot, and it's a good conversation. Do you have anything else, Dima?
No, I'm good. Thank you everyone for sharing. Thanks, John.
All right, cool. So what is it? Wednesday, 2 more days this week, and we'll keep on chugging and keep getting at it. Be patient. The market is looking interesting all of a sudden, so that's fun. But let's wait and see what tomorrow brings. It could be a flat, choppy, nothing day. But just had some earnings come out: Disney, Twilio, and a couple other companies, and some of them look kind of good. I only got to check out a couple, so that might bring fun things tomorrow. We'll see.
We also have the CPI coming out tomorrow. So.
Oh, that's right. Yeah, the Consumer Price Index. Yeah, who knows? Gosh, who knows what that'll do? All right, yeah. So buckle up. And what time does that come out, Isaac? Do you know?
I don't know what time it comes out. I'm just knowing it's tomorrow, so I'm going to be careful.
Yeah, I can't remember. I think it's pre-market. I think, but I don't. Check an economic calendar. There's a billion of them out there, but that's a good thing to be aware of. Yeah, any of the Fed notes, announcements, CPI, things like that. We want to be careful around those times. All right, guys. Have a great night, and we'll talk to you next time.
Thank you.
Thank you.
Thanks, everyone.
Bye.
Bye, guys.
Thanks, everyone.
Thanks. Appreciate it.